I want to kick off where we just ended with Matthew, and that is energy demand improving. CEO Ahmed Nasser is talking about China and India as demand growth improving, but it's very worrisome when you look at the West, the United States and Europe. What do you see when you look at demand?
Yeah, that is absolutely correct. It's often quite difficult to know oil demand or oil consumption in real time. But what we do know is whether refineries are running. And we know that pretty much daily. And it's indeed very consistent with the observation that you just mentioned. Refineries in the non-OECD are running pretty much as hard and as fast as they did before coronavirus. It's the weakness is concentrated in the OECD countries, the US, Europe, the rich developed world. But I think there are some reasons to be optimistic. One of the countries, of course, that we track in a huge amount of detail is Israel. It's a bit of a petri dish of what can happen to mobility and oil consumption as a result of vaccinations. And what we see there very clearly is that there is only a very short time lag between vaccinations picking up and mobility picking up. So if Israel is in any way a template for the rest of the OECD on what could happen to mobility and oil demand once vaccination reach sort of critical threshold levels, then I think there are good reasons to be optimistic for the second half of the year, particularly towards the end of the year.
If the second half of the year is going to be potentially what we're seeing right now in Israel to other parts of the world, how worrisome is it in terms of actually having the supplies on hand? Because we know that OPEC is keeping very much a tight lid on those supplies.
Yeah, look, this is one of the reasons why the oil price has rallied so much over the last couple of months. The practical reality is this: based on the inventory draws that we can see, and we can see a lot of inventories these days, we think the oil market is undersupplied already by something like 2, maybe 2.5 million barrels a day. Now, that's a lot. That is at the historic upper end of how much oil markets can be undersupplied. And against that backdrop, we think that about 4 million barrels a day of demand will come back. Now, mathematically, very quickly, that leaves about a 6 million barrel a day hole in the oil market. And then the question is, who is going to fill that? And the answer to that question in 2021 is not the non-OPEC producers. It takes time to ramp up non-OPEC production. U.S. shale can respond quicker, but even U.S. producers will struggle to generate production growth this year. That could be very much a 2022 story. So this year, OPEC, who admittedly does have a lot of spare capacity and could fill this gap, OPEC is in the driver's seat, and they are having control of the oil market this year.
Goldman Sachs called the recent sell-off in oil transient. Last week, we had one of the worst weeks since October. Do you still maintain this 70-plus price on Brent, Martin?
Yeah, no, like we would largely agree with that view. Look, commodities are not like equities, right? Equities reflect expectations of earnings and cash flow between now and forever, appropriately discounted. Oil prices mostly depend on the supply-demand balance, well, sort of right here, right now, over the next couple of months. If you look at what will happen, we think over the summer, as we go into the third quarter in particular, very steep inventory draws as the demand growth really picks up, as we just discussed. We're forecasting $70 as an average for Brent for the third quarter, but have written that we could very much overshoot that level. Now, what will then happen in 2022 and 2023 is open to debate. But in this reopening rally, there are tensions in the system that we think can only really be resolved by prices going to those levels.
One point I just wanted to finish on is, according to some of the data we're seeing from traders and analysts, is that when it comes to Iranian oil leaving Iran, it's about 1 million barrels, and that is going to China. How complicated does that make OPEC Plus's job the next 5 meetings down the road if we are seeing Iranian oil come back into the market when these are obviously not supposed to, given the sanctions?
Yeah, that is a question that we all worry for, a lot about. Look, the practical reality is this: there is room in the oil market for more supplies, including Iranian supplies. If this comes towards the end of the year, then it will be a lot easier to absorb, because by then we think demand will have recovered sufficiently, and the hole in the oil market, so to say, will be large enough that there is room for many players. But it's indeed true that if this were to come a lot sooner than the end of the year, say over the summer already, then that could change the outlook. This is one of the key risks, I would say, to our outlook and generally the market's bullish outlook. If this supply comes earlier, then OPEC will need to find a way to accommodate this, and that would be simply a challenge. There is no other way around that.